The Philippine Telecom rivalry has always been about speed, coverage, and brand loyalty. Today, it's quietly shifting to a test of financial resilience in the 5G and fiber age. Which telecom giant can manage heavy debt with less strain? And who is better positioned for the future? Let's start with the numbers. PLDT, led by Manny Pangilinan, remains the larger engine. 56.5 billion pesos in first quarter revenues and 28.3 billion pesos in EBITDA. Globe, steered by the Ayalas, posted 45.7 billion pesos in revenues and 22.2 billion pesos in EBITDA. So yes, PLDT towers in size. But scale does not always mean comfort. Beneath the surface, the gap narrows. PLDT's financing cost burden was roughly 15% of EBITDA, more efficient than Globe's apparent 20%. Yet when debt ratios come into focus, Globe stands out. Its net debt to EBITDA ratio, at 2.17 times, is lower than PLDT's 2.53. Globe's net debt to equity is just 1.03, while PLDT's is more than double that at 2.24. Liquidity tells the same story. Globe's current ratio came in at 0.81, with PLDT lagging at 0.42. Direction matters as much as levels. Globe actually reduced total debt by 2% in the quarter, while PLDT's debt held steady. In this capital-intensive sector, forward movement isn't just an advantage, it's essential. Investors buy not only ratios, but the trajectory behind them. CapEx decisions underscore strategic tension. Globe increased cash CapEx by 51% to 12.7 billion pesos, investing heavily for future growth. PLDT spent 12.4 billion pesos, pulling back to exercise fiscal discipline. This isn't necessarily underinvestment, but for PLDT, sustaining high CapEx seems more constrained by liquidity and leverage. Business mixes reveal their outlooks. PLDT remains a fixed-line powerhouse, but Globe is fast becoming a pure data play. 91% of service revenues now come from data-driven services. Globe's stake in GCash, contributing 1.9 billion pesos in equity earnings, offers a second profit engine, diversifying its support for the telecom balance sheet. For investors, the choice is nearly philosophical. PLDT delivers scale, stability, and a larger cash profit cushion. But the walls of debt are thicker. Globe offers faster revenue growth, cleaner leverage, stronger liquidity, and clearer debt reduction. A more agile fortress, ready for tighter markets. The battle for debt stability won't be decided in a single quarter. But the current numbers suggest a changing hierarchy of financial comfort. PLDT points to heft and history. Globe points to repair and readiness. In an industry where yesterday's arms race has become today's balance sheet challenge, Globe's story may prove the more compelling direction.